Hi guys, good morning and welcome back to another video. This is a quick update, really small and quick update of what I'm looking for in Nifty's price structure for the next few days. I'll keep this video very short so that you can watch this video before the market opens. Right now, you can see there was a swing low last week near your 15th, and we had a very good rally, right? Towards the expiry day. After that, market went dead sideways, and Friday and your Monday, we had two sideways corrective sessions in the market. So the last two updates. So I gave you an update in the Telegram group around 9:15 over here. Sorry, around 9:30, I think, approximately near 9:30 a.m. I told you that there is some big player who has entered the market and they are shorts. Now we don't know one of these two things. We don't know if it's shorts entered or longs exit. Correct? These are the two things we don't know about. So what do we do now? We have to look at the structure. So the second update I told you was very simple, 38 to 50% zone. 38 to 50% zone. If we mark it for the previous swing, it comes around 24,880, 24,806. So what I'll do is I'll just mark the zone, right? So as long as this zone is intact, it is not necessary for price to touch. Like I told you, in case this is a corrective pattern, we can see complete sideways movement the entire week. Like this can be a triangle pattern also. It is not required for this to touch. If it does, then very good, right? It creates a low risk opportunity. So in case price today, that is your 20th, if market drops anytime and bounces from here, this will create a very good complete some fourth wave, and then we will go for some fifth wave in the market, right? And this swing high, as soon as it breaks, it will confirm that yes, this is the trap. So here, when I gave you the trap idea that some players have entered, if they really want to trap retailers, they have to make a new high, right? They have to pull the market to make a new high. So first condition I've told you that if market bounces from here, it'll be some wave 4, and then we will look at some wave 5, right? Now if market does not retest this part and it bounces from here directly, no issues with that. This will still be some wave 5. So as long as this swing high is broken, it will guarantee us that yes, this was some trap by the operator, and this will be a terminal leg in the market. And this week or towards next week, we can see some fall in the market, right? Corrective pattern. So question here now, how far can we see the bounce? Generally, I expect this bounce to come towards, let me just mark it. Let's say if this bottom is done, then I expect the bounce to come minimum 25,150, and it can sustain above it. It can go all the way to 25,300. First option. If tomorrow market comes to retest this point, let's take this, we can expect minimum towards this swing high, minimum bounce towards this swing high, and then after that it can go all the way up to 25,290. So this range will be the range for wave 5. Okay, this is very clear. Now to the question regarding your time cycles. Now time cycles here, what has happened is, I think this has become an inversion, right? This is an inversion right now. So in a higher time frame, what are we expecting this time cycle to give us? A major time cycle to give us a high swing high in the market. What has happened here? Exactly when the time cycle starts, markets went straight up. So we waited for some time, and we wanted to see if market turns back down. Market is not turning down. Like I told you in the time cycles video, inversions, if market does time cycle does an inversion, we cannot predict it. This is impossible to predict. So what we do is we have to wait and see what market does here in the price action. So far, like I told you, if this time cycle high, right, if this high is broken, then it is confirmed for me that market has done an inversion. Correct? That is confirmed for me. Then I'll see the price action later on. After this week, we'll see what happens. We have to go one by one, right? This is what is the time cycle telling me. Now the condition, what if market does not go high? What if market does not go high? What if market starts to fall? So in that case, like I told you, the first indicator we have is 38 to 50% zone. I think most of you know by now what this zone is. Zone of continuation, right? If there's a buy on dip scenario, as long as the trend is intact, then 38 to 50% zone should provide some sort of a support in case. So in case market tomorrow does something like this fast move, right? If this 38 to 50% zone is broken, then it will tell us, yes, market has made some important higher. We are minimum going towards 24,500 level, right? These are the two options I have. So in case of this up move, right, most likely we will see this up move. In case of this up move, what strategy is most favorable for me? What I'll plan for is that first I want to see if this zone is held. If market retests this zone and rebounces, then I'll plan for an easy weekly option sell. That'll be very, very simple. If I show you a strategy here, what I'll plan for is that is 800 level, right? So I can plan for, you have to wait always for this thing, the trend to change. You can't just go blindly, just take a normal basic setup. So per lot, you will get approximately 5K plus, right? Per lot, 5K plus. No need to worry. Easy week for us then if you take this strategy. Now, what if question is market directly bounces from here like this? In that case, since we are targeting this range, right? We are targeting a range here of this previous swing high to 23,300. Sorry, 25,300, right? In that case, what I'll do is I'll plan for a straddle here. I'll show you how that looks like. So what I need confirmation is that yes, market is not going to come down, it's going to go higher. What I'll do is I'll plan for a straddle of 25,100, right? In that case, I'll get a very good range. Then I'll add some hedges here. 3 points, 1, 2, 3, right? So something like this, it'll be a straddle here. What I'll do is instead of executing the entire straddle at one time, I'll execute this leg first, the put option. This is a bit advanced. Only if you're very confident in your analysis, you have to do this. You can do this. What will happen is some decay will happen. Then when the market goes higher, near 25,300, something like that, then I can execute the other side of the straddle. Or else if I just take out these hedges, it will give me a very, very good range, right? So I'll get a big range of 24,700, 24,700 to 25,400. Let me just see in the chart, how does it look like? 25,400 is over here. 24,700 is over here. So anywhere between, if the market expires, I'll be in good profit. Right? This is a good strategy in case directly market gaps up and moves higher. All right. This is what I'll be looking for today and coming sessions. I'll keep you updated if there's any new updates in the Telegram group. Like I said, always, if there's something which I cannot make a video on, I'll definitely update it in the Telegram. I'll see you there. Till then, take care and be safe.